Good morning, party people in the place to be. Oh, sorry, it's too early in the morning for that. You're tuned into the morning show with yours truly, Dex the Algo Capitalist, aka The Vulcan, coming to you live from postwavetrading.com, home of the world famous postwave attack alert trigger reports. And you know what? You can have access to those if you go to postwavetrading.com. All you got to do is go ahead and then get yourself in the game. Because today is FOMC day and anything goes. The markets have been poised and positioned for today. Very tight trading ranges, a little bit of volatility here and there, nothing really big to write home about outside of Bitcoin and Ethereum. But other than that, markets are poised to go either way, believe it or not. I know it's hard to believe, but the way things are setting themselves up, it's looking like we could either have a sell off on Wall Street or we could have ourselves a rally on Wall Street. Which will it be? That's the question. That's the $1 million question today. And not just the FOMC when it comes out at 2 p.m. Eastern Standard New York time, but the press conference afterwards. That's what people are really going to be clinging to. They're going to be dissecting every word. Computer programs and AI will be running to interpret what he's saying. They're going to interpret body language. And they're not just going to analyze the words that come out of this man's mouth, but they're going to also break down the body language. They're going to break down what he says, how he says what he says. And then they're going to look at what he didn't say. And they're going to look at how he did not say what he didn't say. Whole bunch of metrics are going to be used, so that people can get an understanding of how they need to position themselves. Now, you can go that way, but I prefer the old-fashioned way. I'm old-fashioned. I like the technical analysis, all right? Fundamental analysis and econometric modeling has its place, all right? Always will. But you're not going to be able to time the market with it. All you can do, really all the fundamentals do is, basically they're either going to confirm the trend on the price action or it's not. All right. But at the end of the day, the only analysis you really need is the price itself. Price tells you everything you need to know because everything that is known, can be known, is already factored into the price. And not just that, but also what people think about what they know and what they think about what they think they know is also factored into the price. And that's where you get your volatility in. One group says, no, I believe this. The other group says, no, we believe that. And then you have your tug of war. And that's basically how the markets operate. That's how they've been designed to operate. It's based on human nature. And there's not a thing you can do to change it. Isn't that neat? All right. So, speaking of change, let's take a look at these overnight markets and see if anything has changed. Well, first and foremost, the US dollar index has powered itself up right back above the 104 handle. We're sitting at 104.01, up 17 pips. Putting pressure now on the euro, down 13 pips at 108.90, dropping below that psychological 109 level. And then you have your pound sterling down 17 at 127.12. The pound sterling is having a problem, having trouble staying above the 127 handle. So definitely watch that. And then you have the Aussie, which is at 65.42. It's been oscillating here between, like, we'll say 65, 65.40, 65.50, and 66.40. So it's been about 100 pip trading range in your Aussie dollar. Looking at the Bitcoin futures, we're down $380 this morning at 64,215. Ethereum futures, however, are up 7.5 points at $3,355 even. Crude oil futures down $1.44 a barrel this morning at $81.27, just off the overnight low of 81.16. We have nat gas down 3 cents at $1.71. Gold futures up $7 this morning at $2,166.70 per ounce. Silver also catching a bid this morning, up 7 cents, trading at $25.21 per ounce. Copper down a penny at $4.05, maintaining that $4 average. We have the Dow futures down 13 points at 39,527. Very tight trading range. Overnight low 39,426. So barely even 100-point trading range there in the Dow. Even the S&P 500 futures down a point at $5,240. And it has a very tight trading range too. Just over 10 points. You're at 52.46 and a quarter for the high and 52.33 for the low. Then you have your NASDAQ 100 futures up about 2 ticks at 18,270 even. And the trading range here is 18,227 half and the high 18,334 and 3/4. Very tight ranges coming into today. And then you have the Russell down 3.6 points at 2055.70. Overnight high is 2060. The low is 2047.70. Extremely tight trading ranges in these stock indices. And then you have your soybeans up 7 cents this morning at $11.93 a bushel. Your corn is down 3 cents at $4.35 a bushel. And your wheat down a whopping 10 cents this morning, trading at $5.41 per bushel. And it's just a tick or two away from the overnight low. So is corn. All right. So I'll point that out to you. And that's how the night markets have shaped up and the early morning trade. We're almost an hour into this morning's trading. So we'll see how things start to look as we get closer, headed in toward the 2 p.m. Eastern Standard New York time FOMC, followed by the 2:30 press conference. So between 2 o'clock and 3 o'clock, maybe a little bit after 3, depending on how long the press conference runs and how late they start. It could be over by 3. It could be over by 3:30. Who knows? But you got that hour to an hour and a half time frame window between 2 and 3:30 where you could see a lot of volatility in the market. And we'll get our answer today. Are we going to rally in the stock indices or is the market going to fold? And it's going to be a very interesting trading session for sure. Let's get into the market news of the day. We already know about the FOMC, but some investors are betting big on a rebound in commercial real estate. I got to tell you, commercial real estate has been in trouble since like 2008, 2009. And that really hasn't changed, folks. So I don't know what they're talking about. I guess they got to talk their book, but it's not anywhere near what they claim it is. Instagram is on a comeback tour, and the number of Amazon staff put on PIPs spiked from spring 2022 through early 2023, according to a human resource document. Now, the PIPs, for those that missed the last few morning shows, PIPs is a thing where your company, your job, puts you on a performance review. That's their way of, before they just fire you, they have cause. Now they say that, well, you're getting fired, you're getting laid off, downsized because your performance is just not up to par. All right, so that's how that works. All right, kind of a legal way for your job to protect itself from firing you. And in the U.S., jobs are at will employment anyway. First 90 days they can fire you without cause, and then after that it's a little bit harder for them to fire you, but they can still fire you. So it's not like you have job security unless you have a contract. If you have a contract, that's the only job security you can have in the United States, because the other party has to fulfill their obligation in the contract. So even if they want to let you go, early, They still have to buy out and pay off the rest of the contract. They just can't give you the boot because you have a contract. So, yeah, a little bit different. But speaking of jobs, jobs are part of the economy. And that's what today is about. Today is all about the US economy. And what about an economic freeze? Well, for better or worse, we're all stuck in a current economic situation. A trapped in place economy is in full swing, and bad buying conditions coupled with everyday high prices means consumers can't make any major life changes. The housing market is the most obvious casualty of this economic game of freeze tag. High prices, unrelenting mortgage rates, and low inventory have kept buyers and sellers mostly on the sidelines. But it's not the only area of the economy that's stuck. Nope. The car buying and job markets are also stalled. And as a result, many of us are treading water with no clear destination in sight. And for plenty of people used to gunning for the next big personal or professional move, that can be an uncomfortable position. There's one thing that could melt the economic freeze, and that's high borrowing costs, which are one of the key things keeping the status quo firmly in place. It's tough to take big swings when the cost of capital is so high. It's also one of the main reasons there's a disconnect between how Americans feel about the economy versus what the numbers show, according to at least one group of economists. The Federal Reserve isn't expected to announce a rate cut this afternoon, but the Fed Chair Jerome Powell's comments after the Federal Open Market Committee's announcement could provide clues for when relief will arrive. These days, a good chunk of the market is betting it'll come in June. But regardless of when rates are cut, when and if they are cut, consumers might still need to do a bit of soul searching to realize the past is the past. Plenty of financial experts, including one of the most successful hedge fund managers, predict high inflation will stick around not for weeks, not for months, but for years. And the idea the Fed will snap back to a zero rate environment, partly what got us into the economic mess in the first place, seems more like a pipe dream, and mortgage rates under 3% are likely a relic of the past. You'll probably never see those rates that low again in your lifetime. So while consumers lament being stuck in place due to the freeze economy, they should also avoid getting stuck looking to the past. Not that that's going to put food on the table. So back to the pain in commercial real estate, which means opportunities for Wall Street. That's right. Do you guys remember Mary Poppins? One of my favorite scenes was the banking scene when the little kid's father was trying to explain basic finance and investing. So she had I think it was a little girl, had a toppings. I don't know if it's a girl or boy, you can correct me, but the child had a toppings in their hand. And the parent said, go ahead and give it to the banker, and he's going to open up an account for you. And, this is the beginning of your investment future. So he did. And then the child regretted it afterwards and said, I changed my mind. Can I have my toppings back? And the parent was like, no, you don't want to do that. I mean, you've given it to the bank now. They're going to hold that for you. And, they're going to, it's going to compound interest. And, you'll be able to add more to it as time goes on, explaining finance to the kid. But, a small child, being a small child, screams out, give me back my money. And it's a crowded bank. And this is the early 1800s, no, the early 1900s, like 1910, I believe. And so when the people hear someone, or they don't know it's a child, they just hear a voice of screaming, someone saying, give me back my money. So then an elderly lady in the bank says, what? The bank won't give somebody back their money? And she turned around and ran to the teller and was like, give me all my money right now and close my account. So then everyone inside the bank just stopped what they were doing and just bum rushed. The teller was like, give me my money. It caused a huge run on the bank. It was just hilarious. And I bring that up to say, because this is kind of what we're seeing happening now. They're trying to cover up well, not necessarily cover up, but put a veil, a very thick veil, not a curtain, but more of drapes. They're trying to put a big drape, a drapery over the current U.S. banking situation. So painting commercial real estate means opportunities for Wall Street because they love bankruptcies and things like that. It was like, oh, this is opportunity. That's the opportunity for the real estate people to buy low and sell high, right? You buy depressed bank and foreclosed property, pennies on the dollar, and then you turn around and you sell it for its real going market rate. So investors like Blackstone and Steve Munchin are wading into the troubled CRE market, indicating the industry could be ready to rebound. Now, the signs are there from an increase in single family rental deal making to prices on commercial mortgage backed securities rising. Again, remember, they're doing things that you don't have access to. You and I, we don't have access to these kind of things. Because remember, the big thing right now is people like BlackRock are buying up not just commercial real estate, no, they're buying up residential real estate. All right. So sooner or later, your HOA is not going to be your HOA. Your HOA is going to be Blackstone or BlackRock, whatever. They always change their names, but you know exactly what I'm talking about. You'll be paying your mortgage to them. You'll be paying your rent to them. Is investing in sports fair or foul? Well, that's funny. When the legends in baseball did it back in the day, back in the 1920s and 30s, they got hemmed up for it. Who was it? Was it Babe Ruth? One of those, uh, you know, got blackballed because he was betting. And so now they're saying, oh, it's okay. And that's because sports now have become scripted. Just like the old school WWF, remember the WWF, the World Wrestling Federation, before it changed itself to WWE? Well, all of that stuff is scripted too, right? Now, just because something's scripted, it doesn't mean it's fake because they're still giving you a show. The show still takes great athleticism. So you're getting a show, but it's a script and it's gonna detail how the game goes. And so that's why they're able to open up betting because you better believe that the house always wins. And in order for a casino to be profitable in the long term, it has to use the gambling betting principles of running a casino. So sports in itself has literally become a casino. The reason why the casino is profitable and prosperous because the mathematical equations say that the longer you sit there and play the roulette wheel or the slot machines, the more money the casino is going to make, even if you win every now and then. And the numbers can be tweaked. The machines can be calibrated. Also, did you know that? So if the machine's too hot, they can recalibrate it to make it not as hot. Okay. The different things, little tricks that they can do in a casino to make people not just play longer and spend more money, but also make sure they're not putting out too much money. All right. So if you get lucky and you do the roulette wheel and you win money, or if you sit down the slot machine and you win $1 million, that's nice. Most people are not going to stop there. They're going to say, oh, I'm on a roll. Let me keep playing. But if you got up and walked away, then you would be a winner. So casinos now design it so that if someone looks like they're hot or got lucky, they know how to move and how to manipulate the situation to the point where you're going to stay there and give them all that money back. And you'd be like, what do you mean? I'm not giving nothing back. Yes, you do. People do it every day. They do it every day. Oh, look at you, big spender. We got a surprise for you because you're doing so well today. Look, man, we're going to give you this incredible penthouse suite for free. You're going to get all the works. We're going to send a few hookers up to the room for you. We're going to give you all the wine and stuff you can drink, all the champagne and caviar. Yeah, we're gonna roll out the works for you. You want a little bit of nose candy? We got that too. No problem. And before you know it, you're back downstairs gambling, and you've lost all the money, or you're giving a big chunk of it back. That's the business of gambling. So now that sports has become a global casino that is also scripted now. So they're not slot. People aren't slot machines. People are not roulette wheels. So you come up with a script like the WWF, and that's how things are carried out. So all the bets and stuff being placed, all the different applications and all the different things you do, they can control that. So it doesn't matter if everyone in the world plays, if 7 billion people on Earth want to bet on the Dallas Cowboys and the Washington Redskins game, they can handle that. They can. It's scalable the way they have it now with artificial intelligence, things of that nature. This was not legal 20 years ago, 30 years ago, 50 years ago. This was unheard of. Yeah, you had bookies. People could still bet on horses and stuff like that, but it was black market. It was illegal. But now it's being legalized. It's been sponsored not just by the states, the individual states, but the Fed, your government. All right, has also said, do what you do. Just make sure you break us off our piece. So is investing in sports fair or is it foul? Well, it depends on the individual. All right. I don't like betting on something that I can't really control or manage to have an edge. At least with the markets, with forex, with crypto, with equities, with commodity futures, I have an edge. I can put the odds in my favor. All right. I have price action. In sports, you don't have any of that. You have a zillion different matrices, from individual athletes matrices to the team as a whole matrices to the coaching staff matrices to the owners matrices to what city they're playing in matrices to the weather conditions matrices to the statistical stats on how the team has played in the rain, played in the snow, played in the heat, played in the cold. Does the quarterback have a sniffy, runny nose? If he does, remember the last time he had one, he threw the ball out of bounds 12 times. All like a zillion different matrices that come into that, and there are people, believe it or not, who have made that their job. You can be there's a such thing as a professional gambler. Look at poker. Poker is one of those gambling things where you can actually have an edge. You can manage your risk. Okay, so there are people who can do that, but again, it is expensive and requires an enormous amount of learning curve and investment. Because if you're gonna do it like the professionals do it, they have stats on everything. And I mean, they look at everything. You think people just go to the track and just bet on a horse, random horse? No, they know the jockey's name, they know the horse's name, they know the everything about that horse, when it was born, they know the mom, the parents, they know the whole genealogy of the horse, they know the jockey that's riding, how much they weigh, did they have, are they alcoholic? They know everything about it. They know everything, the track itself, the conditions of the dirt, the weather, and how the dirt maintains on the weather, how the horse does in certain things. Is this horse better on the inside, outside of the track? Should the horse start off slower or start off faster? I mean, just all these different matrices that go into the whole sport betting space or sphere. And it's big business, and now it's becoming bigger business. And you have to ask yourself why that is. It used to be looked at as vices and stuff like that, and people wouldn't want to invest in that per se. All right, you couldn't just go to your bank and say, I'm going to open up a casino, or I just want to go in here and I want to buy a football team. Well, it takes billions of dollars to become a team owner. You don't just go and say, I want to buy a team. No, it's an industry, and you have to know the ins and outs about it. So JP Morgan just set up its own sports investment banking team, folks. That's how serious this is. As hype builds ahead of the crucial NFL meeting, some have questioned whether sky-high team valuations could be entering bubble territory. But a study showed why sports investments remains a good deal for firms. Now, the MLB and the NFL outperformed stock, bonds, and private equity on a 20 plus year basis, according to these authors. All right. I don't know what kind of matrices they're using for that, but that's not, I take issue with that because, you know, playing video games actually helps you to learn a lot about things too. Now, you may laugh, but if you play like, NBA 2K and you go and play the general manager mode or whatever team owner mode, you have to go through all the things that they go through in real life. You got to handle on the field, off the field situations, player situations. You got to look at salaries. You got to hire staff, and then you got to make sure that your organization is making money in order to justify those salaries. So you got to everything down to pricing the hot dogs to all that stuff, advertising, marketing, branding. It's it's a video game, but it's a simulation. It's a real life simulation on what it would be like if you really were the owner or manager or coach of a particular sports team. So you can learn a lot there, but there's a lot that goes into this for anyone that may be interested in looking into it. Myself, that's just not for me. I stick to the markets. I stay in my lane. I don't ever see it as having fun. Maybe I'm an old, stick in the mud, but I never saw gambling as fun, like betting on a team to win a game. I think the thing that always threw me off was this thing called the spread. Now, some people say, well, it's no different than the spread on Forex or on equities or futures when no, it is a difference because with when you're doing that kind of betting, even if your team wins, you could still lose because of this spread thing. It's not just that the 49ers have to beat the Cowboys in the Super Bowl, but they have to score this many points or whatever the thing is. I never liked that because I can't control that. I may have a good idea that the 49ers are going to defeat the Cowboys in the Super Bowl, but as far as points, there's no way to know how that's going to go. Anything could happen. The field goal kicker could break his foot, and now those 3 points or that extra point kick that they would have relied on and is out the window because now they got to put in the backup. And let's say the backup is really not all that good. Well, that can affect the outcome of the game. Can you imagine losing by a field goal, one that you would have made if your star kicker didn't break his foot? So things like that have to be taken into account. And it's just too much for me. I'll leave that to you guys because I'm sure some of you listening, that's your thing, and that's fine. But it's just not. It's too much. So you can thank bankers for the United States' vibrant economy. That's according to Bank of America CEO Brian Moynihan, who shrugged off calls for regulation after NYCB's recent wobble. Now, capitalism and the banking system have helped the U.S. economy weather the pandemic, higher interest rates, two wars, trade debates, and shipping restrictions, he said. I beg to differ. We don't have organic capitalism in the United States. We have interventionalism, not true price discovery, free market capitalism. We don't have that. And we've really not had that in my lifetime. Maybe some of you older listeners can recall a time in your lifetime when that existed, but in my lifetime, it has not existed. How Instagram got into the world and finally found its mojo, so they think. Just a few years ago, it felt like Instagram's relevance was fading, but after beating out TikTok in growth last year, the app is on a comeback tour, thanks partially to the rise of trends and threads. But here's the thing, though. Is Instagram really getting its mojo back, or is Instagram benefiting from the interventionist capitalism of the federal government? What do I mean? Well, when the government is being your bully, being your attack dog, it's a lot easier to get ahead. See, with them wanting to ban TikTok, well, if they do ban TikTok and it is no longer in your app store, well, that's going to make more people go back to Instagram, especially those that left Instagram for TikTok. Now that TikTok has left them out in the cold, they have to run back to Instagram. So, in a way, you could say the government is picking winners and losers in this space, but no one does anything for free. So, what is the government getting from Instagram on the back end by helping them by beating out their competition, TikTok? By getting TikTok out the way, now who benefits? Well, Instagram benefits. See where I'm going? OpenAI is poised to release the next version of ChatGPT. It's on course to put out GPT-5 sometime mid-year. Two people familiar with the company told, and it's really good, like materially better, one CEO who recently saw the new version of the intelligent language tool said. Welcome to the super chip era. NVIDIA CEO Jensen Huang ushered in a new phrase and phase for the AI sector when he unveiled the B200 chip on Monday. The semiconductor giant clearly demonstrated that it continues to be 1 to 2 steps ahead of its competitors, JP Morgan said. Yeah, but that's not going to keep that stock from correcting. Nothing goes straight up. All right. At some point, things will have to come down and correct mightily it may. So if you are one of those individuals who are long that stock, you might want to start tightening up the stops because you don't want to get caught off guard and end up giving back all of your profits because you got greedy. All right. I'm just saying. All right. And if you need to know how to go about doing that, just come on over to postwavetrading.com and we'll help you out. We have tons of information there for you on NVIDIA. A PIP spike at Amazon. An official HR document shows the number of Amazon staff put on performance improvement plans, which spiked from spring of 2022 through early 2023, a time when the company was going through major layoffs. Some employees saw it as a quiet firing tactic. That's because it is. Domo's CEO stepped down in 2022 after being accused of SA. Josh James stepped down as the data and analytics company's CEO after the alleged assault in late 2021. According to police reports and employees, he was never charged and returned as CEO in 2023. Microsoft adds more AI talent. The tech giant has hired Google DeepMind co founder Mustafa Suleiman to lead a new group spearheading all its consumer AI initiatives, including its Copilot chatbot. It's not the first time CEO Satya Nadella has tried to add a big name to his stable. And in other news, my dad is a billionaire, Steve Ballmer. Here's what it's like growing up rich and being kind of ashamed of it. Wow, really? Ashamed of being rich? Whatever. Exclusive. Databricks acquires startup Lilac AI to beef up its LLM offerings amidst AI arms race. Yeah, an AI arms race. Unbelievable. China may be developing plans to take out U.S. satellites from the moon, Space Force General says. Notice how every day there's something about China doing something to the U.S., Russia doing something to the U.S. Someone's always doing something to the U.S. The U.S. has become the world's victim. Everybody's picking on me. I think the U.S. needs to pick up the phone and place a call. Not don't call Kim Jong Un. He's not going to help you. Don't call Putin. He's not going to help you. All right. Don't call Xi Jinping. He's not going to help you. You need to pick up the phone. And I think the president of the United States needs to do this. The president Biden needs to pick up the phone and call my man Jun Ree. That's right. He needs to call Jun Ree. You're probably like, who's Jun Ree? Well, for those of you who don't live in the DMV, you probably may not know, but you probably have heard this. All right. When you call jury self-defense, then you too can say, nobody bother me. Nobody bother me. Call something, something 1000. Then you too can say, nobody bother me. And then the little kid says, nobody bother me either. And then he smiles and puts a thumb up. So that's who we need to get, because nothing else seems to be working. Everyone's picking on the U.S. The U.S. is just being bullied, getting his lunchroom money taken, you know what I'm saying, getting his pockets dug out by the bullies on the playground, being body slammed off the monkey bars, being drop kicked on the basketball court. Somebody needs to step in and do something to help the poor, victimized United States. Yep. Hong Shen split from Sequoia last year as U.S.-China relations worsened. Now it's eyeing up Europe. From offices that look like Apple stores to private call booths, here are 5 ways your workplace is changing. And this company charges from $350 an hour to teach people how to behave at work. You got to tell an adult how to behave themselves at work, and they have to pay you $350 for you to. What in the world is going on with the minds of the average American person? Have Americans just lost their minds? Have they gone insane? Incredible. You can't make this stuff up. Here's what else is happening today. So the Federal Open Market Committee will make a decision on interest rates today, 2 p.m. Eastern Standard New York time. Reddit is expected to announce its final IPO pricing, and Astrolab shares are expected to commence trading on the NASDAQ. All right, folks, that's it, man. That's all I got for you today. It's going to be interesting. I will tell you that, man. It really is. Who knows what's going to happen? That press conference is going to be mind bending, and we'll see. We'll see. I don't. I don't know. I don't know. Um, no one knows what he's going to say. And even if you had a crystal ball and you knew exactly what he was going to say, here's the thing that you don't know. You don't know how the markets are going to react. That's right. You don't know. And because you don't know, you step aside until you do know. And with that, you know what it is. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button. Subscribe if you haven't already. Share these videos with friends and family. You never know who it may inform, encourage, or help. And I'll see you guys back here this evening. Peace.